If there is a will, there is a way. So think about the goal you're trying to reach, the impact you want to make, and the amount of money you want to have to help you reach those goals.
Welcome to the American Dream Builder and Investor podcast, where our vision is to inspire busy professionals, especially first and second generation immigrants and Americans, to explore the state of the American dream in 2022 and beyond. That is the Trinity of freedom: time, financial, and geography freedom. I'm your host, Micy Liu, and I have achieved financial independence, and I'm helping many others to do the same. I started out with $5,000 and have really built wealth for my family along the process. Now I am on a mission to help hundreds of thousands of people like me to do the same.
Hi there. Welcome to another episode of the American Dream Builder and Investor podcast. I'm your host, Micy Liu, and today we'll talk about finding money to invest. Sometimes you may look at your checking account and you say, oh, wow, I don't know if I have enough money to invest, or I don't know if I should be investing with this money. Well, I'm not a financial advisor or CPA, but I can share from my experiences and the experiences of the people I know where they look for funds to invest to further increase their investment sizes and also increase their returns. Now, before you make investment decisions, it's based on my experience, it's always good to make sure that you have emergency funds, 3 to 6 months, or even longer, of your monthly expenses, depending on how long you think it'll take you to replace your income sources if you lose them. But in terms of amount of money to invest, some of the things that's worked for me and the investors I work with, and also some of the partners I know. First, cash. Cash is king and queen. That's always awesome. But I know that sometimes your cash may be tied up in other places, in other forms of investments or tools. If they're in stocks and bonds, you could consolidate some of them. I don't recommend consolidating all of them because it's important to diversify your investments, but you could consider consolidating some of them. You could also consider selling your RSUs, restricted stock unit, especially I'm more talking about the vested RSUs or other equities. Or you can actually use it as a collateral. You can use the vested RSUs as a collateral for a low interest rate line of credit. And for example, if you take loans on your RSUs at a rate of 5% and you're getting into a deal that has a high likelihood of giving you 8 or 10% returns per year, then you're making a spread of 5% between your real estate investments and the interest rate of the collateral loan, while continuing to stay invested in the stock market. So it's a pretty good option to do that. Obviously, there are other cons with that too. So I recommend you research on this a little bit more and reach out to your CPAs before making that decision and reaching out to your financial advisor as well. We talked about lines of credit with RSU. You can do that to other places where you have funds as well. That could be a solo 401k account or a self-directed IRA account, and most frequently used in your traditional 401k account. If you have a 401k account with a company, a lot of times they allow you to take a loan against your 401k. And with that loan, you can pay back in 5, 10 years, however many years you need in the term. And from my research, I researched this, I haven't done it myself, is that a lot of times when you leave a company, they basically call the whole loan due. So you would have to be prepared to pay the entire amount back if you get fired or if you leave the company or if you get laid off. Another con is that you would have to pay the entire term worth of interest, no matter you paid off earlier or later at the exact term date. So that's something you need to be thinking about as well. How long will you actually be needing the money, or how long will you be needing to pay it back? It's taking a similar concept. It would be basically trying to make the spread between the interest rate you're paying on the traditional 401k compared to the interest or returns you'll be getting with that money. Another thing to think about is taking a self-directed IRA account. So what is a self-directed IRA account? If you have a IRA fund, you can set up a self-directed IRA account typically. And that allows you to self-direct it to invest in alternative investments such as real estate, oil and gas, maybe your cousin's new restaurant they're trying to open, etc. It's essentially giving you a lot more control on what you want to invest in rather than just the stock market. It's a great way to give you a little more exposure to investment instruments outside the stock market, especially if you're getting closer to the retirement age. It's one of the great ways to do so. And another thing is also cash value policies, taking loans on the cash value policies of life insurance. We'll talk about this in the earlier episodes as well with MC, and I'm happy to make an introduction if needed as well. So essentially, it's taking a similar concept of taking a loan against the cash value, and you're able to leverage that to invest.
This podcast is sponsored by Life Mission Capital, founded by me, Micy Liu, where my life mission is to help busy professionals invest well so they can focus on what matters. All my life, I was taught to study and work hard for my freedom. Until one day, I realized that unless I let my money work hard for me, I will always be trading my most precious resource, time, for freedom. Since then, we have also been helping our investors passively diversify into more than 1,000 units of recession and inflation-resistant alternative investments, such as multifamily, mobile home parks, short-term rentals, and more. Learn more with our free ebooks at lifemissioncapital.com.
I know I talked quite a few on the loans options, line of credit. One of the pros of taking line of credit is that you know that your investments has to be making minimally the amount of interest that's costing you. And you want to have a little wiggle room. You're further leveraging the money, but you're putting it into better use. That's one of the pros. And the con is that you need to watch the loan terms and payback times and the interest rate and the terms. I think line of credit is an amazing thing. And that could also be HELOC or refinance on your home equity, as most of us has gained a large amount of equities in our homes in the past 2-3 years post-COVID due to inflations, unfortunately. But that is a very good tool for us to get into with HELOC and refinance or taking a secondary loan on the property. But like any investments, when you financial decisions, you need to be aware of the risks going into it. Make sure you're comfortable with potential downside protections. But in general, I am a big fan of leveraging loans and lines of credit as long as they're good lines of credit, meaning they're for good purposes. You're trying to use it wisely, not buying a fancy car with it and just living beyond your means. Those are actually tools to help you produce more income, so let your money work for you. It reminds me of a story of someone said, what would you do if you were given $100 million? And some people say, I would spend it, I would invest it. And a strategy was they would use the $100 million to taking a portion of it, that maybe let's say $70 million, and buy real estates with it. And the amount of money that's in the real estate, they would take additional loans with those real estates as collaterals to further leverage it and do more stuff. Obviously, more leverage means potentially more risk, but it's also risks that you have to make sure you're comfortable with. So all I'm saying is there's many places you can find funds, especially with line of credit, cash consolidations of your existing properties. And the last thing I would want to mention is finding another side hustle, right? I would say the last two things I want to mention is one is finding a side hustle, right? It may be a little bit slower, but something you're passionate about doing, whether it's related to the line of work you already have, or a hobby like photography or making YouTube videos or something you're super passionate about that you don't even feel like you're working. That can also continue to give you and start to accumulate funds to invest. And the last thing is, hey, just find a partner who's willing to lend you that money, right? One of my friends was considering and basically lending money from some of the more senior friends of hers to basically invest their money and make the arbitrage. So an example, she would be borrowing $50,000 or $100,000 at a fixed rate, maybe 3% or 4%, and using her house as collateral if needed, some of in liquid assets as collateral if needed. And she would basically be placing that capital into other places that makes higher returns. And when the returns come back, she would pay back her senior friends and making the difference in between. But because she would be taking it out as a loan through her friends, so she will have to pay back even if her investment is not making the money. So that's the downside risk. So another thing I want to remind you is that if there is a will, there is a way. So think about the goal you're trying to reach, the impact you want to make, and the amount of money you want to have to help you reach those goals, right? Like a colleague I spoke to, she said, I want to be able to make 6 or 7-figure donation checks every year towards faith-based organizations. And that's her goal. She has numbers. So now she just knows all the tools at her disposal to make that happen. So hopefully that makes sense. When there is a will, there is a way. And I just share with you a few ways to leverage credit, leverage line of credit, leverage debt, loans, and consolidations of your personal belongings to make that happen. So hopefully you have all the tools at your exposure to conquer 2023. See you soon.
Thank you so much for tuning in to the American Dream Builder and Investor podcast with me, Micy Liu. We hope you enjoy the tips and tricks that others have used to build their American dream and their trinity of freedom. We would love for you to subscribe and leave a rating and a review. You can also find all the episodes and details on lifemissioncapital.com. Until then, let your life mission go wild.